You know, the housing market in 2026, it was supposed to be getting back to normal. Instead, we're stuck in this really bizarre gridlock. Sales have slowed to a crawl, almost a complete standstill, and yet prices are still stubbornly high. So what is really going on? Let's break down this fascinating and, kind of frustrating stalemate.
Okay, so to really get a grip on where we are now, we've got to rewind the clock a bit. Let's go back to May 2022. Remember that? That's when the Fed basically declared all-out war on inflation. And in doing that, they brought an end to what one source so perfectly called mortgage nirvana. That whole era of ultra-low interest rates, poof, it was officially over. The market didn't just slow down, it slammed to a halt, and that plunged us right into the uncertainty we're still navigating today.
And the shift has just been so dramatic. Think about it. The pre-2022 market was all about those rock-bottom rates, those frantic bidding wars, and homes just flying off the market in days. Now, fast forward to 2026, we're staring at high rates, this frustrating gridlock between buyers and sellers, and just historically low sales volume. It is a completely different world.
So this brings us to the central paradox, the big question at the heart of all this. With sales activity basically falling off a cliff, you'd totally expect prices to follow suit, right? But they haven't. So why are we stuck in a market where almost nobody is moving, but home values are staying sky high? All right, let's dig in and we'll start with the sellers.
Right, so the first big piece of this puzzle really comes down to the homeowners themselves. Millions of them are locked in what you could almost call golden handcuffs, these incredibly powerful financial incentives that are keeping them firmly planted right where they are.
And the core of the issue, really, it all comes down to this one number. A huge majority of homeowners right now are sitting on mortgages with interest rates below 3%. Just think about that. The thought of selling your home only to turn around and get a new mortgage at a much higher rate, it's a massive financial roadblock. For millions of people, it just makes zero sense to move.
And to see just how powerful this effect really is, let's look at a specific case from the source material. It's about a homeowner who bought their modest 4-bedroom house decades ago for just $60,000. Sounds like a dream, right? But you just wait until you see what happened next.
So, over the years, because of things like really desirable local schools, the value of that same house has skyrocketed to an estimated $2.5 million. Wow, that is an absolutely incredible return on your investment. But it also creates an incredible problem.
And here's the trap. If they decide to sell, even after taking their $500,000 tax deduction, they would still face a capital gains tax on roughly $1.8 million. That's a life-altering tax bill we're talking about.
And this quote just captures the feeling perfectly. When you combine losing a sub 3% mortgage with the threat of a massive tax liability, well, this is the sentiment you get. It's not just that they don't want to move. For a lot of these homeowners, it feels financially impossible. And this is a huge reason why housing inventory is still so incredibly tight.
Okay, so let's flip the coin and look at the other side of this transaction. Because for every seller who won't sell, there's a buyer who just can't buy. And if you're a prospective buyer in 2026, you are running an absolutely brutal gauntlet of challenges. Buyers are just getting hit from all sides. It's a perfect storm. Mortgage rates are high, home prices are still elevated precisely because the inventory is so low. On top of all that, a choppy stock market has really taken a bite out of people's down payment savings, and you have geopolitical events that just keep adding inflationary pressure. It's tough out there.
But here's where the story gets a little more complex. Buyers aren't just disappearing completely. After sitting on the sidelines waiting for rates to drop, a lot of them are starting to accept this as the new normal. They're actually starting to re-enter the market, and that is causing some subtle but really important shifts in the whole dynamic.
So beyond this immediate dance between buyers and sellers, there are these deeper issues going on. The fundamental cost of not just building, but even just owning a home has been soaring, and that's adding a whole other layer of pressure to this market.
Look, we can't solve the inventory problem if we can't build new homes. And right now, building has become incredibly difficult. You've got high development fees, soaring material and labor costs, plus recent tariffs all squeezing builders' margins. And the result? New construction has been basically flat. It's doing very little to relieve the pressure on supply.
And this number right here shows you just how bad it is. This is the NAHB Builder Sentiment Index. It's a monthly survey of home builders, and anything below 50 means more builders see conditions as poor than good. At just 36, the index is deep in negative territory. This shows a profound lack of confidence from the very people we need to build our way out of this shortage, which pretty much means affordability isn't likely to get better anytime soon.
And believe it or not, the costs don't stop once you finally get the keys.
The price of ownership itself is just soaring. We're seeing huge jumps in HOA fees, skyrocketing home insurance rates, especially in places like California and Florida. And get this, major insurance companies are even pulling out of some states entirely.
So the big takeaway here is that it's not just about the mortgage anymore. The constantly increasing cost of simply maintaining and insuring a home has become another major barrier, and it's causing even more would-be buyers to just hit the pause button.
So, okay, sellers are stuck, buyers are struggling, costs are rising. Is there any good news in all of this? Well, yes and no. The prognosis isn't for a crash, but it's not for a boom either. It's what experts are calling a mixed market, a new, more complicated reality that actually has a few surprising bright spots.
Here is one of the biggest changes we're seeing. The days of what was called a rabid disregard for pricing, those are gone. The power has shifted, even if it's just a little bit. Negotiation is back on the table. Buyers are now successfully asking for sellers to make repairs or to kick in for closing costs, things that were just unthinkable a few years ago.
And if you want to see this shift in action, just look at first-time buyers. Historically, they make up about 40% of all sales, but they hit this really painful low point in 2025, dropping to just 21% of the market. That was really the peak of the affordability squeeze.
But look at this. In 2026, we've seen a rebound. That number has climbed back up to around 34%. Now that is a significant green shoot. It shows us that despite all the headwinds, a new generation of buyers is finding ways to adapt and get into the market.
So I think the ultimate takeaway here is that anyone who's still holding out hope for a return to that low-rate, high-volume market of the past, you're probably going to be disappointed. This isn't a temporary blip. It's a new, more challenging, and in some ways, maybe a more balanced reality for real estate that is likely here to stay. And that, of course, leaves us with a big question. With sellers trapped by low rates and high taxes, buyers squeezed by affordability, and builders hampered by high costs, the market is in a true stalemate. So what force, whether it's economic, political, or something else entirely, is going to be powerful enough to finally break this gridlock?